Hello traders, welcome to a new video here on the channel. So today I want to make a video specifically dedicated to the trailing drawdown and the new end of day drawdown rules that are being used by a lot of the trader funding companies. I'm sure a lot of you are familiar with them. They're basically companies where you get a simulation account, certain size, certain parameters and rules, and if you are able to get your profit target without violating any of the rules, then you're gonna get a quote-unquote real funded account where they back you with their own money and you can trade, and any profits that you make, each company has different rules, but basically you're going to get to keep a big portion of those profits and withdraw them as real money. So, this is a good alternative for people that either don't have the necessary funds to have their own trading account and futures, etc., or they just don't want to risk their own capital and they want to try to get to work basically with a prop firm or someone that is going to back them up. Okay, so traditionally all these companies have a trailing drawdown. This is common on all of them. If you go to Top Step, Earn to Trade, Lilo, Bullinox, all these different companies out there, most of them are in the futures markets. You're going to see that they all have a trailing drawdown, but some of them now are starting to move towards an end of day drawdown, and this is what the video is going to be about, and I'm going to explain to you what the big advantage of this rule is and how it works exactly. So let's just take as an example, this is Earn to Trade, and they have a new type of account called the Trader Career Path, as well as their Gauntlet Minis, and they all have different parameters which you can go check out on their website, etc. They have an offer going right now for their $50,000 Trader Career Path evaluation. And by the way, if you want to take advantage of this discount or any other future discounts with Earn to Trade or with Bullinox, which also has the option of the end of day drawdown, make sure to check the links in the video descriptions. They're gonna get you the discount and is gonna help the channel to keep growing, expanding, and bringing you more free content. So thank you all for your support. So let's just focus on this side. Let's take a $50,000 account example, and so in this case you have your profit goal, etc., and we have an end of day drawdown of $2,000. That means that your liquidation balance would be $48,000. So you're allowed to lose $2,000 at the start. Let's say this is the maximum you can lose. We're not taking into account daily loss limits in this video. This is another rule that many companies have. So obviously, you have several rules to comply with, but this video, I just want to show you how the drawdowns work, which is probably the most important rule and the one that all these companies have in common. Because for example, Lilo doesn't have a daily loss limit, but they do have a trailing drawdown, for example, etc. So just check your company and follow whatever rules they have. Okay, and I have a bunch of videos on various companies for trader funding, so make sure to go to my channel playlist called Trader Funding, and you can find a lot of information and guides over there. So let's go over a very simple example using round numbers, so it's very easy to follow, and I'm going to show you exactly the difference between these two and why I think the end of day drawdown is a very big improvement over the traditional drawdown. So we're going to start with a $50,000 account. Let's say your trailing drawdown is 2,000. So that means your liquidation is 48,000. So let's say we're in the futures market. Trading day starts at 6 p.m. Eastern time, US. And let's say it's now morning. Markets are open. Stock market opens 9:30 a.m., etc. And so let's say you open one position now. Now, let's say it's not in here, but let's say just a little side note. Let's say you open the position and it immediately goes against you and you close it and you lose $500. Now your balance is $49,500. Well, in this case, your trailing drawdown is going to be the same, because the trailing drawdown is only going to track any new profits that you make. So if you open a trade and you immediately go underwater, the trailing drawdown is not going to move. It's only after you start going up, even if it's just $1, that the trailing drawdown is going to start following your live price, and it's never going to go down. The trailing drawdown does not go down even if your balance goes down. Okay? So let's say you open your first trade, you go long, and it goes up, and now you're $1,500 in profits. The trade is still open. We're going to hold the trade through this whole example. The trade is going to be held open. And now at this point in time, you're at 51,500. And now your trailing drawdown is going to go up $1,500. It's basically going to follow your maximum new profit at that moment. Now, let's say price retraces a little bit against you and your balance goes down $500. Well, in this case, the trailing drawdown stays the same because your balance went down. You did not make any new profits. Now, let's say from here, price finds some bidders again, and we go up. And now your balance is up to $52,000. So we went from 51,500 down to 51,000, and now it went back up again, and now you are at $52,000 balance. So that means you just made $500 in new profits from your previous high. So now your trailing drawdown is going to move up another $500. So now at this point, your trailing drawdown is $50,000. Your account balance is $52,000. Let's say price now hits a very strong resistance here, and now it starts going down hard, but you keep holding the trade open. Now at this point, you just gave back $1,500. So that means your balance is now $50,500. But your trailing drawdown is not going to go down. It's going to stay at $50,000. What does that mean? This is now where you see, why this rule, you got to be very careful, because now you've given back you basically had $2,000 in profits, and you've given back $1,500 of those profits. So now you only have $500 of wiggle room between your balance and your liquidation balance. And now let's say you just keep the trade open and it just keeps going down $500 more, and basically you go back to your starting balance of 50,000, but you get liquidated because now you went down to the trailing drawdown price. So basically, you made $2,000 on the trade that you had open, and then you just held it and it came back $2,000 against you, and it hit your trailing drawdown because the drawdown went up $2,000 as well. Okay, so that's pretty much how the trailing drawdown works. Okay, let's say for example that you close the trade here, so none of this happens, and the day ends. Well, now the next day you're gonna start off next trading day with this parameters, with a balance of 50,500, and now you just have $500 of wiggle room for the next day, etc. Or if you just close the trade and you open a new one, now you basically only have $500 of wiggle room. So you're gonna need to make new profits here for, to get yourself a little room between the drawdown liquidation and your balance. Okay, but basically that's how the trailing drawdown works. Is going to follow all your new live profits, and it's never going to go down. Okay, so that was trailing drawdown, and this is how still many companies have their accounts set up. Now let's focus on end of day drawdown, which is the purpose of this video, and let's see why this is, in my opinion, a much better alternative. So now, same thing, we have a $50,000 account, end of day drawdown is $2,000, and now your liquidation again would be, if you go down at the end of the day, to $48,000. Okay, so in this case, you can see that trading day starts, and then you open up a position and you go long. And same thing here, if you just open the position and it goes down or up or whatever with the end of day drawdown, it doesn't matter what happens. All that matters is what your balance is at the end of the day. So basically, let's say same example as this. You open, you make $1,500, your balance goes up 51,500. The drawdown is the same. You go down, you go up, down, etc. Price can pretty much move any way it wants. The only thing that counts is what you close the day with. So in this case, if you close your trade here and the trading day is over, and again, pay attention to what the rule for your company is, but in general, all these companies are going to require you to close your positions around 4 p.m. or 4:10 p.m. Eastern time. So make sure you see what time you need to have your positions closed. None of these companies, most of them, do not let you hold trades open between trading days. So just make sure you know when the day is over, so you're flat. But basically around 5 p.m. Eastern time is when the day's balances are settled. And so if you, let's say this day, you opened a trade, you had a maximum profit of 2,000, and then you gave it all back and go back to 50,000, well, nothing is going to change. Your end of day drawdown is going to stay at 48,000 because you did not register any profits. So that means the next trading day, you're simply going to start again right as you left off here. You're going to have a balance of 50,000 and an end of day drawdown of $800. So you can see right off the bat, is very evident what the advantage of this rule is, where basically you can, obviously you want to have good risk management. You don't want to be giving back profits, but you have the possibility of, giving back profits, etc., having your account balance fluctuate throughout the day. And as long as you end the day at a specific balance, that's how the drawdown is going to move. So, and then this has different scenarios. let's say, for example, if you start your day like this, and let's say you finish off the day and your balance is 49,000, well, your end of day drawdown is going to stay at 48,000. So that means the next day you need to finish the day above $48,000. Okay? If, let's say, how can you get liquidated with the end of day drawdown rule? Well, let's say you start off the day like this, and then let's say during the day you could even lose, during the day. Let's say you do very bad, and at one point your account balance is at 47,000. Okay? If you try to make it back, and let's say you cannot, and the day finishes and your balance is $47,000, and again, we're not assuming anything about day loss limits, because probably you would be liquidated because of your daily loss. But if your balance goes down a lot, but then you manage to mount back, and let's say you manage to just close the day at a balance of 48,100, then you're good. You're not going to be liquidated, because as long as your balance finishes for the day above your end of day drawdown amount, then you are good. Okay? But let's say over here, let's say you end your day at $51,000 balance. Well, in this case, your end of day drawdown is going to move up $1,000. So in this case, your end of day drawdown is 49,000. So that means for the next trading day, you cannot finish the day with less than $49,000, or you're going to lose the account. Okay? Because you finish the day at 51,000, that means your trailing drawdown moves up 1,000. It just follows whatever profit you make at the end of the day, and that's it. Okay? So I hope that was a pretty clear explanation. Again, a lot of companies are starting to adopt this type of drawdown. For example, Earn to Trade. If you want to try them out, again, you can check out my link below in the description. But I think this is a rule that is going to be a big advantage for traders, because instead of following any new live profits that you make, it's only going to take into account whatever profits you register after the close and the settlement of that day's action. Okay? So that's pretty much it for the video. Thank you for tuning in. If you haven't done so, make sure to subscribe, hit the thumbs up button. Any questions or comments, leave them down below. Check out my trader funding guides as well on my channel, and all my other educational content. And if you're interested in information on my trading courses also, you can check all that out on my website. Okay? Hope you all have a great weekend, and I will see you all in the next video. Take care.